Good morning, everyone. Well, I just want to quickly say thank you to Phil. My name is Ryan Tracy. I'm co-writer at Capital Account, and we're so proud to be the media partner of AFC at this great policy summit. And we've got our nose to the grindstone every day, trying to report, explain, and break news on financial regulation. And it's satisfying work because of rooms like this. We've got, all of you are engaged on these issues, and you don't mind getting in the weeds, and you're looking to learn, and that's the pleasure of our job. And so we're very happy to have so many members of our audience here as well. And I'm grateful to have Senator Rounds here, who is the third-ranking Republican on the Banking Committee, and also just a leader and an influential voice on technology policy. He was the one of the senators who Senator Schumer selected to be a leader of the bipartisan AI working group in this Congress. So a lot to talk about. Thank you, sir, for being here.
Thank you.
Now we're going to get to policy in a minute, but as we all know, personnel is policy. And so I just wanted to start briefly on personnel. The Senate obviously plays a constitutional role in terms of advice and consent on nominations. How do you think President Trump is doing so far in terms of selecting nominees that can be confirmed by the Senate?
Well, look, the president naturally has the responsibility for making his recommendations known to all of us. And we always start out the same way, at least I think we do, and that is the president gets the benefit of the doubt with regard to who he wants within his cabinet. But clearly the Constitution says that we have a role of advice and consent. I interpret that as advice or consent. And what in some cases you do is you advise the president that perhaps there's somebody else better. On the other hand, you may very well say, look, we think you've picked the right person, and we're going to give you the benefit of the doubt, and they're going to move forward. The vast majority of the nominees that we've seen so far, Marco Rubio as an example, those are going to have bipartisan support coming through. There's going to be some that are going to be more colorful in their hearings. And I think, the American people are going to be watching to see how they answer the questions and so forth. For the members in the Senate, this is where you get uncomfortable because you'd like to be able to support the president, but you also have a constitutional role to do your due diligence and to ask the questions and then to decide whether or not, number one, they move out of committee, and second of all, whether or not you would support them on the floor. The folks coming out of committee will have a lot more information about the individuals. And, and that's going to have a major role in terms of who they allow to come to the floor for final vote. The other part of this is remember, when you move from one administration to another, the president, once he is inaugurated, on that same day, he is really hoping to get the vast majority of that critical group of nominees who are very, very important for national defensive purposes. He's going to want those folks in like that day. And we agree with that. But that means you've got to do all of your hearings for those individuals before he is actually inaugurated. We come in on January 3rd, and from January 3rd until about the 20th or so, it is going to be a wild time in the United States Senate because you're going to have hearings almost every day that we're here with the different members coming through, making their case, and hoping to get pushed through the committee process, the vetting process, and ready for a vote once the new president is inaugurated. We can't put them in place until Inauguration Day. And so it's going to be a very interesting time between the 3rd and the 20th for making those nominations or getting them set up. We don't know who the nominee for Treasury is going to be yet. And that's going to be a major discussion point once it happens. At the same time, let me just digress a little bit. You've got the folks who you follow carefully, whether you're talking the Fed, the SEC, OCC, and so forth, FDIC, there's going to be some changes. And part of the frustration that we've had in the Senate is back when we created the ability to tailor regulations based upon the types of activities that different financial institutions did under the Fed with the endgame or Basel III endgame, they just decided that they're going to throw out tailoring in this proposal. And that's going to change now once again, I believe, and we'll get back to where we'll actually have tailoring becoming an important part of the regulatory process so that financial institutions can be regulated based upon what they're actually doing rather than a one-size-fits-all. So I think just with regard to the different entities themselves, coming into the new administration, I believe you're going to see a chance for financial service organizations to actually have what I consider to be a better shot at getting reasonable regulations in place. I think it's an entirely different attitude. And one more item, and then I'll shut up and let you ask more questions. Look, what happened when the Supreme Court went back and talked about overturning the Chevron decision is huge for business in this country and for consumers in this country. To actually say that a regulator has got to actually follow what the Congress had put into law, and that if they don't, that you can actually challenge them, and the decision maker is not another regulator or bureaucrat, it's the courts. I mean, you talk about a breath of fresh air for the American people. I mean, what a marvelous opportunity for us to take advantage of this and to actually get back to following what Congress intended when they wrote some of these laws in the first place. And if you're going to have a regulatory oversight, you're going to have to follow what the spirit or what Congress actually asked you to do in the first place when you write the regulations. So we've got a real opportunity here to turn the page with regard to how we treat regulation of businesses in the United States. This is good not just for businesses, this is really good for consumers as well. Now, your turn.
No, they want to hear from you, not from me, so no problem at all. And just a technical point, our timer hasn't started yet, so I assume someone will make sure that I don't go over time. We don't want to keep Phil in a good mood.
They were just enamored with the conversation.
That's
so
it,
far,
yeah.
So.
So let's talk about, following up on your point about a change in tone at the regulators, this is a crowd that really cares a lot about the regulatory approach to innovation. And there's a balance to be struck there, obviously, between protecting consumers, particularly when you're talking about financial innovation, and also embracing that innovation and allowing it to happen. What kind of tone shift are you looking for under a Republican administration with Republican appointees on that issue?
Let me give you an example. Well, first let me start with this. I think regulation should be clear and concise. I think everybody should know what the ground rules are, and then the financial institutions, the organizations, the associations should be able to look at what the rules say and not have to go back and say, Captain, may I, every time they want to try to innovate. Either it's allowed by the rules or it's not. Rather than, can I do this and can I do that, which is what the regulators right now seem to want to do. They want you to come genuflect and then ask permission to do something different. It's time to change that. And that goes all the way back, if you're in a bank, to the auditors that come in and talk to you as well. Change that attitude to where either you're following the regs or you're not. But the other piece of this that I think is important is if you're going to regulate or if you're going to innovate, there has to be a place where you can do it safely to where you know that it's okay for you to do it. We've introduced, with regard to artificial intelligence, and we hope to be able to move it through this year. It may take next year. But with regard to using artificial intelligence within financial services, we think there ought to be a sandbox where they lay out the guidelines for how you can innovate using artificial intelligence. On a bipartisan basis, both in the Senate, Martin Heinrich and I have it in the Senate together. Representative Hill is leading it in the House. We think that you should have a defined area in which you can innovate using artificial intelligence and know that it's okay to do so as long as you live within the parameters of the sandbox for innovation. Those are the types of things that I think we should be doing to allow for that innovation to occur. Artificial intelligence, as the vast majority of you know, is here already. It's been here for years. We've called it machine learning, and then as some people shared with us, they found out that there was a lot more money in it if you called it artificial intelligence instead of machine learning. But what we've come to now is a generative approach in which computers can actually train themselves. And using very, very large databases, they can actually retrain and learn from themselves, from the system itself, from the algorithms themselves, how to recreate those algorithms within themselves. This is a unique thing that we've never really done before in the past, where a system can learn based upon its successes or its failures in determining an outcome. But one more piece of this discussion that goes on is that it is not going away. So we can talk about it either being scary or and run away from it. or we can grab a hold of this and say, we're going to master this. We have to master it. And I'm going to talk now from a member of the armed services in the intel community. China, Russia, Iran, all of them are very, very active with regard to AI. They're not stopping, and they do not have the standards that we have, and they do not have the moral approach to some of these things that we believe we have here in the United States. Either they will set the standards for the world with regard to how artificial intelligence is incorporated, or we will. And the only way that we can is if we stay ahead of them, literally in a race with no endpoint. So artificial intelligence is here, it's for real, it's been used in businesses for literally more than a decade, for almost a generation now, but it will not go away, and we have to stay ahead of it. So in your businesses, you can use it for good, and that's where we want to focus this on is what can you do to make yourselves more efficient? What can you do to provide better products? What can you do to help consumers? And can you go back to a group of investors and say, this is worth the time to invest in it and to actually take the time to do it correctly? And then, by the way, what was good 6 months ago is not leading edge anymore. It's going to be changing that fast. So there's going to be a constant upgrade, just like there used to be in computer systems themselves. When you came in with a PC and pretty soon, 2 weeks later, there's another PC on the market. That's the way AI is going to be moving in the future. It's going to be rapidly moving. You have to have a way to innovate. That's the purpose of a sandbox. It's a place where the regulators recognize that you're going to be playing within a set of parameters, but you're going to have the ability to actually look at how to improve on the use of artificial intelligence within your own business for the good of not only your stockholders, but for the good of consumers as well, who otherwise might be underserved with regard to financial service products.
Well, and that bill that you mentioned would specifically apply to financial regulatory agencies, right, in terms of a sandbox. Talk about, let's hear from you on the legislative agenda. What do you expect the banking committee to focus on next year?
I think with Republicans having a very short window of perhaps 18 months where we will control the House, the Senate, and the presidency, what we need to be able to do is what we can with a majority vote in the Senate, which has to do with what we call a reconciliation process, where we can do tax policy based upon achieving budget goals on a committee-by-committee basis. I think our focus will be, number one, on getting the tax policies back in place that will be expiring next year, so that people will know what the tax consequences are of their decisions, and doing that over an extended period of time. Number one on the agenda. Second piece on this will be, how do we work through the process of actually making the federal government more efficient, if I can say that? Look, I am really optimistic that this government efficiency approach may very well work, and we can take a look at where we can actually totally eliminate some departments within the government. And I'm going to throw out one right now. The Federal Department of Education doesn't educate anybody. And yet, if you take all of the different programs that are there within the Department of Education, the loans, a Title I, just as an example, your special ed and so forth, all of those programs that we agree are good, and if you take them and you put them back away from where they were before the Department of Education was ever created, we think we save over $1 billion just by eliminating the department and redistributing those programs back to where they were before the regulatory side of the Department of Education was created in the first place. Those are some examples of some things that I think we can do and actually save money and do a better job for actually giving the states more of the authority to do a lot of the work within education, just as an example. But I think there's a possibility with reconciliation you can do one a year. But we haven't done the approach process for this year yet, have we? I mean, we got a continuing resolution that's going until the 20th of December. And right now it looks like, depending upon whether or not the House can get their act together, they may not even want to do the appropriations bill until September 30th, which I think would be the goal of the Senate. We may end up going, unfortunately, and dumping it into the next president's lap until sometimes in March or April. The silver lining to that is you might have a chance for an extra reconciliation product in that process, 3 in 2 years. So I'm optimistic that one way or another, if we can get our act together, the Senate and the House working in unison, which is a big if you've got 219 or 220 members in the House with a very, very slim margin. But if we can put aside our differences internally, we might very well be able to do some really good things with regard to efficiencies within government and within the tax policy and the tax code itself. But time is going to tell. It's going to determine whether or not we will be able to pull people together and to get this thing done in a unique and orderly fashion.
Are there opportunities for financial services related legislation in a reconciliation bill?
Yeah, well, perhaps. But actually, there are some bipartisan issues out there that we could do with a 60-vote margin with regard to financial services. Housing reform and so forth, we can do that on a bipartisan basis. I think there's some real opportunities to modernize some of the housing stuff. Matter of fact, in the Senate right now, we've had a Rural Housing Reform Act where we've got a bipartisan group of a majority of the people on the House or on the Senate committee right now for more than 6 months. We've been ready to roll with it. We just haven't had the committee decide to do anything, under current leadership to actually put it to the floor of the Senate. But it's all upgrading and cleaning things up, and it's items that nobody seems to disagree with regard to how you take care of rural housing. For me, it's personal because in rural areas, such as our Native American reservations, we don't have housing. And one of the problems with it is Native Americans have what we call tribal trust land, where the land on the reservation is being held, it belongs to the Native Americans, but it's being held in trust by the federal government. How do you put a mortgage on a house where the land that they're going to have is being held in trust by the federal government? Well, CDFIs, the financial institutions in those local communities know how to do it. So we tried a pilot program in which we said, let's put some money into the CDFIs and allow them to actually do the loans. It worked great. So now we want to do it nationwide and allow more rural housing to come through community development financial institutions, CDFIs, that actually know how to work with tribal trust lands. Just as an example, those types of reforms are available to us right now, and they're bipartisan in nature. So yeah, can we do stuff, and does it all have to go under a 51-vote margin? Absolutely not. There are reasonable people, both sides of the aisle, that will work together with regard to reasonable reforms in financial services. You're going to have, back when we did 2155, the tax code changes that we did, or not the tax code changes, but the financial reforms we did, the tailoring bill, we did that without the support of the Democrat leader on the committee. But because other members were ready to work with us across the aisle to get that done. That same approach may very well have to be taken this next year as new leadership comes to the Democrats on that.
Senator Warren being in the ranking member
I am.
spot, yeah.
I am, yeah. And no, we may be able to work together with her on some things, but there's other areas where philosophically we're just simply going to disagree. But other members on the Democrat side may very well have a differing point of view than their leader.
Well, in the time we have left, I want to maybe do a little bit of a lightning round on a few issues that this room cares about. Crypto, digital assets. Is there potential? How do you handicap the possibility of a crypto bill getting through in the next Congress?
I think the first thing we have to do with crypto is decide what it is. Is it a commodity? And if it's backed by a sovereign, great. But if it's not backed by a sovereign, then you're talking about a commodity. And then the real question is so what do you do? Look, we want innovation to occur, and this is one area in which we're going to need to innovate. How we regulate it is going to be based upon what it actually is and what the product is that's being marketed. So I'm open for different ideas within the industry itself, but you've got to decide which type of a product you want to regulate and then where that regulation should go. You're talking the SEC or you're talking someplace else. You're also going to have to decide which committee is going to have jurisdiction over it, depending upon whether or not it's a commodity or not. So those issues, I think we can work our way through fairly quickly, but I think the industry itself is going to have to come back to us and talk to us a little bit about what their goal is in the first place and where the regulation, a clearly defined group of regulations should be established at.
Right, they spend a lot of money, they've got a little power, so how are they going to use it? Deposit insurance is another issue, and I in research for this panel, saw you quoted back in 2023, after the banking panic we had that spring, being open to the idea of maybe changing the $250,000 per account limit. Is that something you expect to get much attention in this Congress?
It could. Look, here was the deal. What we had with regard to what could have been a really serious issue where you had people that just simply didn't follow banking 101 rules. Let's place the blame where it was at. And at the same time, you had significant changes in the market with regard to interest rates. The bankers, the professional bankers that I've talked to tell me that if you were a professional banker, you could see this, and you were allowing for the change in interest rates so that you didn't get your institution in trouble. There were some folks that were trying to parse being a bank versus being a very adaptable a provider of services to this unique industry or brand new industries that needed more than just what a traditional bank would do in terms of services. And in doing so, the regulatory folks didn't do a good job of regulating how well they were protecting the assets that they had. And I think the San Francisco Fed has been called on the carpet for that particular purpose. I think the Federal Reserve and the FDIC, I think, did some retrospective review of whether or not they had done a good job of oversight.
But I mean, legislatively, is there an opportunity for Congress to change that potentially?
The actual value, just because of inflation, yes. What that number should be, whether you go to a 300 or a 350 or a 400 number, I'm open to that because I think because of the inflationary trends and so forth, I think that needs to keep up.
Okay.
So I wouldn't have a fear of that. But I wouldn't want folks to think that that should be the overriding approach. What we've got to be able to do is to get back to actually having bankers doing the banking, and they should be held accountable for not following banking 101 guidance, which was not being done in this particular case. So you're still going to have to hold the actual entities themselves and the managers accountable for the failures that occurred. And the regulators need to be able to clearly regulate what the expectation is and to hold the entities accountable in a very timely fashion. I don't think that occurred with regard to those particular instances. And I think the Fed recognizes it, and I think the FDIC has recognized it as well.
Another big issue for this crowd is the Biden team of regulators was very focused, especially this year, on partnerships between banks and financial technology companies. And they were moving towards some additional guidance, some additional more specificity on the expectations there. Any thoughts on what a Republican team, how they might approach that issue and how they should?
This would be my advice. Focus on what's good for the consumer. There are underserved individuals that are out there. You have to innovate in order to be able to provide them with services. You have to become more efficient, and if there are areas in which efficiencies can be found, financial institutions who partner with Fintech organizations may very well find more efficient ways of delivering those services. That can't be stopped. I mean, that shouldn't be hindered from being completed. So my opinion is I think and this is only my opinion, I think the new administration coming in is going to look less at regulating it and more at allowing the innovation to occur. But I'm going to say this. If I was looking at it from my perspective as a member of the banking committee, my question is going to be, is this good for consumers? Is this something which is good for consumers? Have we done the right thing for them by allowing those financial institutions to provide them with services that they might not otherwise have?
Well, thank you, sir. I really appreciate you. It's always a privilege to have one of the people's elected representatives take time to talk to us, so thank you.
Thank you. Can I?
Yes.
I know we're out of time, but I just got to say
Closing
this.
thoughts.
Look, artificial intelligence is here to stay. It is being used right now by our adversaries in order to get into all sorts of activities that you think might very well be private. China itself, right now we know that they have infiltrated communications across this country in multiple different areas. And it's not so much that they're focusing on any one of you, but here's the fact that they can focus on any one of you in any one of your institutions, and the cyber threat that they are is for real. And you're going to hear a lot more about it in a couple of days, but what you've already heard with regard to them being able to get into communications on cell phones and so forth is real, and it is very widespread. All I ask of all of you is when you go back and you talk to the folks that you expect to provide you with your cyber protection, your cyber security, take the extra time and get the expertise to ask the hard questions about how hard are our security guidelines. Are we red teaming what we are doing? Are we doing our best to make it more difficult for foreign organizations to come in and to find out, either gather data on us or to be able to manipulate the systems that we rely on a daily basis? This threat is real, it is not going away, and the only way that we're going to protect the assets that we have in this country is to be better at AI and cyber than our adversaries are. And they know it, and they are doing their best to be able to come in here. And the reason why they're doing it, they're coming to where the money is at. They're coming to where the assets are at. They're coming to where the intellectual properties are at. And they don't have it right now, but they want to get it, and we have it. And cyber is their way in. Please, just a heads up on it. Whatever you are doing, don't assume that your cybersecurity plan is already in place. Ask the hard questions, make people respond, and if you're not satisfied with the answer, follow up, because the threat is real and it is growing rapidly.
And that's from someone who gets classified briefings, so take it seriously. Thank you very much.